I recently worked with an e-commerce business processing about $2 to $3 million a month through Stripe. This wasn't a startup. They had an established business, significant processing history, and they were selling a legitimate physical product. They were selling water filtration products. Their chargebacks were normally at a reasonable level. I mean, as reasonable as most merchants can find these days. So they then had a temporary shipping issue for 1 month, and their chargebacks increased by 25%. One day they received an email from Stripe. They logged into their account and there was a banner essentially telling them that 25% of their funds were now going to be held. That's it. No other warning, nothing else other than a couple of extra chargebacks than what they're used to having. So think about what that means. At $2 million a month, a 25% reserve can mean up to $500,000 of their cash flow now being tied up. So naturally, their reaction was, we need another processor. We can't have all this money being held. And that's when they discovered the bigger problem. Their company was American. They had a US LLC and they had a US bank account, but the owner is not a US resident. Despite processing millions of dollars a month and having an established business and established processing history, suddenly finding a traditional US merchant account wasn't nearly as easy as they expected. And I see versions of this problem all the time. I get emails and calls from people who are frantic because Stripe is holding their money or Stripe has shut them down and they don't know what to do. I've been working in payments for almost 20 years and I help businesses secure reliable payment processing. And if you're a non-resident who owns a US company and you're relying on Stripe or another third-party processor like Shopify Payments, there's something very important you need to understand before you find yourself in the exact same situation. So let me explain why Stripe can make it relatively easy for you to start processing, why getting a traditional US merchant account can be so much harder, and what you should be doing while everything is going well so you have options as you scale your business. So let's jump right in. Why is getting a US merchant account so difficult? Here's where a lot of international business owners get confused. So you have a US LLC, you have an EIN, maybe you have an ITIN and a US bank account as well. So why aren't you treated exactly like any other US business? Because when an acquiring bank or a processor gives you a merchant account, they're not just looking at your company, they're underwriting the risk behind the company. So imagine you're processing $100,000 or $500,000 or several million dollars every month. If the business suddenly disappears or fails and customers start charging back transactions, somebody is ultimately responsible for that exposure. With a US resident owner, there are established ways for an underwriter or a processor to verify the individual and, where appropriate, evaluate US credit and financial history. So they basically know who this person is, where they live, what their assets are, and their credit history. Now, with a non-resident owner, these tools can be much more limited. And this is something merchants and online business owners often misunderstand. So having an ITIN doesn't necessarily give you a US credit profile. It helps identify you for tax purposes, but it doesn't necessarily give a processor the same ability to evaluate you financially. And then there's the issue of recourse. If something goes badly wrong and the processor suffers a significant loss, recovering that money from somebody who lives in another country can be complicated and very expensive. So from an acquiring bank's perspective, there's additional risk. And that's why even multi-million-dollar merchants and online businesses can have trouble getting approved for a US merchant account. Now, the next question I often hear is, why does Stripe make it so easy? If US processors consider me high risk, why does Stripe even let me open an account so easily? And the answer to that is that onboarding models are different. One of the things Stripe has done incredibly well is remove friction from accepting payments on your online store. You can potentially open an account and start processing within an hour, which is great, especially when you're starting your business. But here's the important part. Easy onboarding doesn't mean the risk disappears. The deeper risk review with Stripe can happen later, months or even years later. As your business grows, your volume changes, your chargebacks increase, your fulfillment changes, or something triggers a review. Stripe may start asking more questions, and suddenly, the thing that a traditional processor would have looked at before approving you becomes relevant now. And that's essentially what happened with the merchant I mentioned earlier. They had been processing successfully for years with Stripe, then circumstances changed. They had an issue with their fulfillment and they got more chargebacks, and Stripe reassessed the risk and imposed a substantial reserve. The merchant didn't suddenly become bad business, but Stripe's assessment of the exposure that merchant had changed. And if you're completely dependent on that one account with Stripe, they have enormous leverage over your cash flow. So now if you're listening to this, you're wondering, what should I do instead? If you're a non-resident business owner who has a US LLC and you're starting from zero, I actually don't think using Stripe is a mistake. Stripe or another reputable third-party payment solution like Shopify Payments or PayPal or Square can be a practical way for you to build your payment processing history and build your business. So what you don't want to do is assume because Stripe is working today that you'll never need another option. Use those first 6 months of your business strategically. Ideally, what you want to do is build 6 months of stable processing history. Keep your chargebacks low, fulfill your orders properly, keep good financials, and avoid huge unexplained spikes in processing. So you want to keep things as regular as possible while obviously keeping in mind that you're running your business and things can change, but try to keep things as stable as possible so you can build your bank of 6 months of processing. So now when you approach a US processor, you're not saying, trust me, I'm going to build a successful business. You're saying, here's 6 months of processing history. Here's my sales volume. Look at my chargeback history. My refunds are within a normal level. And here's my fulfillment history of how my orders get shipped in the US. So this is what my business actually does. That's something an underwriter at a payment processor can actually evaluate, and it makes a huge difference. And this can make a huge difference between you getting declined and you getting approved with reasonable terms on your account. So the other thing that can tremendously help is developing some legitimate presence in the United States as your business grows. Maybe you eventually have a couple of US employees. Maybe you have some operations there. Maybe you have a small legitimate office you can house, for example, a customer service person or some accounting staff and so forth. So you're giving the processor more substance behind that US company that you have, and potentially more comfort around the risk that they're going to take by giving you a merchant account. Now, I know that isn't possible for everyone, but it doesn't mean that you're necessarily going to get declined if you don't have a US presence. This is just something that will help with the process. But if you're entirely overseas, you may have to compensate for that additional risk in other ways. So I'm not saying that you will get declined if you don't have US operations, but it may mean that you have a higher reserve than normal, or settlements get delayed by a few days, just to ensure that the risk is compensated and that the processor feels confident in onboarding you as a US non-resident owning a US LLC. And the thing to keep in mind is these terms are usually short-lived, usually within 3 to 6 months. If you can prove that you have good processing history, that your chargebacks remain stable and so forth, then a lot of these conditions can change over a few months. So what terms you start with right now when you get approved, for example, for a payment processing account in the US, doesn't mean that these are the terms that are going to last forever. These are evolving, and every 3 to 6 months you can ask for a review. So the important thing I need to emphasize is don't automatically be afraid of reserve. I know a lot of merchants and online business owners hate hearing the word reserve. Nobody wants a part of their cash flow held, but there's an important difference between a reserve and a fee. A reserve isn't money you're paying to your processor. It's still your money. It's subject to the terms of your merchant account and any outstanding liabilities you might have, and it's released according to the agreed schedule. I sometimes tell merchants to think of it almost like a little bank account attached to the processing relationship. Now, would you rather have zero reserves? Of course, everybody wants to have no reserve. But let's say you're an established non-resident merchant and accepting a reserve for your first 6 months allows you to build a solid relationship with a US processor. After you've demonstrated stable processing, you may be in a much stronger position to negotiate better terms and even get that release reserve. And the key lesson here is that working with a US processor and having a small reserve may be a safer option than a random Stripe reserve or a random Stripe shutdown. And now this brings me back to the merchant that I told you about at the beginning. Their mistake wasn't necessarily using Stripe. Their mistake was waiting until Stripe became a problem before looking for another option. When everything is running well in your business, you have time, you have good processing history, you have stable chargebacks, and you're negotiating from a position of strength. When you've just received an email from Stripe telling you that 25% of your funds are being held in a reserve and you suddenly need another processor, now you're negotiating from a position of urgency. That's exactly what I don't want merchants doing. If you're a non-resident owner of a US-based company and you're consistently processing $50,000 a month or more, once you've built at least 6 months of good processing history, I think it's time to start exploring a dedicated US merchant account. Don't wait until you desperately need one. And if you're in the situation where you do need a solution right away, this is something me and my team at Direct PayNet work with. We can look at your processing history, your business, and your current setup and determine what US processing options may be available for you. And make sure you follow along on my channel because payments are only one piece of growing a successful e-commerce business. I have tons of episodes here about increasing conversions, improving approval rates, and making more money from the traffic you're already getting. Thanks so much for listening today, and I'll see you in the next one.